Hello everyone, this is Sam Ghosh and welcome to the presentation on digital payments in India. I have divided this presentation in 5 parts. So I will talk about why should we talk about digital payments anyways, and then classification of digital payments, and then the different influencing factors for digital payments, and the policy structure and the progress that has been made. So let's talk about why should we talk about digital payments anyways. The most important factor is to understand that cash is not free. The common understanding is cash is free and it is easily available and it's everywhere. The thing is that the cash costs not only to the central bank and the banking system but to businesses and households. As per a report from Visa, the cost of cash to the Indian GDP is 1.6% of the GDP. The cost appears in different forms. To the central bank, it appears in the form of printing and handling cost, capital and operating cost for ATMs. For businesses, it appears in form of time spent on handling cash, then the interest lost due to the cash holdings, and for households also interest lost, time spent on acquiring and managing cash, and expected loss from the damage of the cash holdings. Now the problem is that, as mentioned, the cost of cash is implicit and it is not realized. It's a major roadblock for the growth of the digital payments. The second factor is digital commerce. Digital payments is the backbone of the digital commerce ecosystem. It not only facilitates the trusted online transactions and encourages the digital commerce growth of the digital commerce sector, but also it creates it's an infrastructural backbone for the e-commerce sector and also for other digital products and services. But India has been experiencing rapid growth of digital payments. The digital payments is growing at a CAGR of 19%, that is compounded annual growth rate, and compound annual growth rate, and in value, and 60% in volume as per RBI data. Now you can see from these graphs here. Now the retail electronic payments comprising credit transfers and direct debits are growing at a faster rate of 42% and 65% in terms of value and volume. Then entrepreneurship. For the digital entrepreneurs in India, digital payments systems are really important. It is leading, the digital payments are leading, the systems are leading the digitization of several sectors, several industries. Now currently Indian entrepreneurs are using digital payments for customer acquisition and creating engagement for other digital services and products, from e-commerce to financial services to bill payments, hospitality, etc. Also, digital payments is building the trust for digital commerce ecosystem, as mentioned before. Another factor is the data. Access to transaction data enables payment service providers to understand consumer behavior and then employ targeted digitization of industries. Then financial inclusion. The Indian banking system is really small compared to the size of the economy, as really well expressed in the last economic survey. Digital payment is bringing many non-traditional players to the financial services industry. It is actually complementing the banking system. India brought 80% of population of 15 plus age group under the banking system through Pradhan Mantri Jan Dhan Yojana, which is really commendable. But most of the bank accounts remain unused as per the global fintech database. Now digital payments is actually helping creating engagement in financial services because India has India has a significant amount of smartphone penetration, and cheaper data is making actually helping this push for financial engagement. One of the prerequisites for digitization of financial services is know your customer norms, or KYC. It is to protect the country from the money laundering. Now, digital payment systems are helping bringing consumers under the KYC norms, and this is a significant factor because not only it is a balancing act. Not only you have to have digitization, but also you have to protect the country from terrorists and from frauds who use the money laundering systems to harm the country. Now we will talk about the classification of the digital payment systems. First, we will talk about the classification based on use cases. Now, the three different kind of parties that can be involved in a payment system or payment application are persons, that is individuals or consumers, and merchants, and the government, or different kinds of government, actually central government or state government. Now, they can be in the payment initiation side or the payment destination side. Anyways, this picture is from a report from BCG and Google, Digital Payments 2020. Now, the person-to-person transfer in the form of remittance or P2P transfers, micro payments, etc. The person-to-merchant business transfers in the form of e-commerce, utility bills, in-store payments, cash on delivery, etc. Person to government transfers in the form of taxes, tolls, payment for applications, etc. Now, merchant to person transfer in the form of salary payments for businesses, reimbursement, refund payments, dividends, etc. Merchant to merchant transfers in the form of in the supply chain, so digital supply chain payments from small business to businesses, retailer to the distributors, and dealer payments, vendor payments, etc. Merchant to government payments in the form of taxes, duties, excise duty, toll payments, etc. Government to person payment in the form of subsidy transfers, that is direct benefit transfers, welfare scheme money transfers. Government to merchant transfers in the form of subsidies, tax payments. Government to government transfers in the form of central government to state government transfers, budget allocation transfers to government agencies, etc. Now, among all this, the person to merchant transfer is a significant amount. It is the most significant amount, and in the form of e-commerce, utility bills, and mostly the growth is in this sector currently. Now, we also need to understand different payment methods that are being used for the payment systems in India. So some of the payment methods are RTGS, that is real-time gross settlement. This is the bulk transfer and used for high value transfers. Then ADFT transfers, IMPS, and all other transfers are here. Another significant, actually the most significant significant method that we should talk about is the Unified Payments Interface, or UPI. Currently in the retail payments, UPI based apps are changing the whole landscape. Currently, Google came up with their UPI payments app, and currently WhatsApp currently is actually coming up their own UPI payments app, and which is expected to significantly change the payments landscape in India. The other methods are the PPIs, that are wallets, e-wallets, cards, etc. And RuPay, which is indigenously developed card scheme, RuPay. Then some other transfer which are fundamentally used for some specific applications. such as say national electronic toll collections, for toll collections using RFID technology. Now let's talk about the policy support that has been extended to this sector by the Indian government. The Indian government has been extending significant policy support to this sector. The current policy framework for this sector is the Payment and Settlement Systems in 2019-2021, which is to empower every Indian with access to a bouquet of e-payment options that is safe, secure, convenient, quick, and affordable. The different goals for this vision has been divided into 4 parts, which are competition, cost, convenience, and confidence. Now, different organizations are supporting this policy. The RBI that is the central bank, is responsible for the governance of the pricing policies, customer service awareness, and cross-border remittance, etc. The National Payments Corporation of India, or NPCI, is creating the infrastructure to the banking system in India for physical as well as electronic payment and settlement systems. NPCI has been the driving force behind creation of UPI, which is the fundamental framework for many payment applications in India, and which is growing really fast. Then the payment system operators, or PSOs. As per Section 4 of the Payment and Settlement Systems Act 2007, other than RBI, nobody can really start a payment systems in India. RBI authorizes different organizations to act as payment systems. Now, the legal structure for this sector is created by the Payments and Settlement Systems Act 2007, which governs and regulates all modes of payment systems in India. RBI has been made responsible to regulate all payment systems in India. Under this act, there are different regulations came forward, and which are Payments and Settlement Systems Regulations 2008, Board for Regulation and Supervision of the Payment and Settlement Systems Regulation 2008, which are responsible for different kind of goals, different kind of progress in this sector. We'll talk about the supporting factors and the factors that are creating hindrance to the adoption of digital payments in it. The supporting to adoption factors are mobile and internet penetration, favorable regulatory environment, and participation of non-traditional players. Now, India leapfrogged to widespread smartphone penetration before widespread personal computer penetration, fundamentally due to the low per capita income. Now, India has around more than 500 million smartphone users and more than 385 million active internet users over the age of 12, 66 million between the age of 5 and 11. The regulatory environment has been really supportive, as mentioned before. Now, some specific points here, that KYC has been exempted on transactions up to rupees 10,000 for PPIs, the prepaid payment instruments, and two-factor authentication has also been exempted, that is required for credit card and debit card payments. Aadhaar biometric is actually creating a supportive environment for this sector. NPCI, as mentioned before, has been a driving force behind the creation of the infrastructure and standardization of the payment systems. Now, As mentioned before, the banking system in India is considerably smaller compared to the size of the economy, and to make real growth, real significant growth in this sector, participation of non-traditional players is really important. Now, different telcos and different startups has come forward and created applications like Airtel Money, Vodafone, Idea, Tata, etc. Startups such as Paytm, MobiKwik, Precharge, etc. Now, some of the roadblocks, the fundamental roadblocks is the habit of cash. These companies, application developers are not really competing with each other, but they are competing with cash. The cash in circulation in India is considerably sticky, irrespective of economic slowdown. And apart from that, there is a large informal economy which hinders the growth of this sector. The currency in circulation in India increased at an annual growth rate of 10.2% between financial year 2014-15 and financial year 2018-19. The other factor is the complexity of technology. Now, it may not seem very clear point, or many it doesn't stand out to people who are used to technology, and the average age of India is also, median age of Indian population is also considerably low. But there is a significant part of the population which either are of age group who are not exposed to technology at their young age, or they are located in rural areas. So this is another major challenge, because cash is easier to use. People are used to cash, but you have to again learn to use an application to make a payment, and you can make payment. The other option is you can simply hand over the cash or give the cash. So for that, there has to be some kind of incentive. So it can be in the form of cashback or in the form of coupons or something like that can motivate people to try these applications or use these applications instead of doing the transaction using cash. Now, the third factor, that is the implicit nature of cost of cash. As mentioned before, the cost of cash is implicit. It doesn't stand out. Nobody really people think cash is free, which is not true. And there has to be some kind of value proposition apart from only incentives that can motivate people. Only those kind of like cashbacks or incentives to motivate people to keep on using these payment systems instead of cash. Now, there are other factors like inertia of other non-cash methods and fear of online fraud, etc. Now, let's talk about the progress that has been made in this sector. The cash use in India is one of the highest in the world. As of 2018, the cash propensity in India was 49.3% compared to 11.2% in Australia and 3.4% in Japan. The concern, the worrying point is that the cash use is growing in India. Now let's make some charts using RBI data. These charts are for credit cards and debit cards and how they are used. So the first chart shows the ratio of monthly credit card transaction at point of sales versus the ATM cash withdrawals using credit cards, and the second one shows same for the debit cards. Now for the credit cards, if the ratio is more than 1 for both charts, if the ratio is more than 1, this means that more money is transacted using the point of sales, using credit cards at point of sales compared to cash withdrawal. and the same for the debit cards. Now, if it is lower than 1, that means more money is withdrawn rather than transacted using point of sales, at point of sales. Now, for credit cards, we see that credit cards are fundamentally majorly used at point of sales. The ratio is around 150, and this is also growing. So the more and more cash is, more and more money is used at point of sales using credit cards, transacted using credit cards. For debit cards, the situation, the ratio is less than 1. So ratio is like 0.2. So this means that debit cards majorly used for cash withdrawals, but this is changing at around 30.7% annually. But still, we cannot see this kind of trend reversing, or this kind of situation changing very quickly or very soon. Now let's talk about the notes in circulation. The notes in circulation is growing at 10.5%. And if you are wondering about the valley here, the major shift around January 2017, this is because of the demonetization. The worrying part is that the growth rate is also seems to be increasing. So not only people are using more cash, but it is accelerating. And this is also okay. So demonetization also created the spikes here in these two graphs as well. Now let's talk about some of the players here. Now, as per Razorpay, this is a report from Razorpay. The preferred payment modes are primarily cards, more than 56%, and then net banking around 24%, and then UPI based payment applications 17%, and then wallets. Now, in the UPI use, UPI applications are the fastest growing payment applications, and in UPI around 54%, more than half, is through the Google Pay. And then we have PhonePe around 12%, and then Paytm around 10%. With this, thank you very much for watching. This is Sam Ghosh. Bye bye.